I like the indices long. I really do, but I cannot justify chasing. And so, sometimes if you've watched the show every day, there are some times where I'm in a rally and I'm preaching to everyone, look, if you're not in it, it sucks and it hurts, but you have to wait. You have to be practical for setups, right? So now I get to live it because I'm not in this rally, and I really wish I was, because I've been really bullish on indices, but I'm not in this rally. So what do I do with that? What do you do if the markets are rallying, you're not in the move, but you really want to be? Well, I'll tell you what I don't do. I don't go full port long the S&P, because had I done that, look over what happened over here. You had a real quick multiple day, like 4-day sell-off. And you also have to remember, we're living in some unique times. The stock market does not do this forever. It simply does not, right? There are times where had you just, sort of given in to the temptation and bought high over here, you might have had on the S&P 500 at one point a 10% pullback, which doesn't sound like a lot, but most traders here employ some level of leverage, right? Most traders, especially if you trade on a Forex broker, a lot of people who are trading CFDs, right? If you trade NAS 100 or XAU USD or, SPX 500, you're trading a leveraged product in CFDs. Now, if you're trading SPY, that's not leveraged. If you're trading futures, right, you can choose things that are not levered. But a lot of people are trading with contract for differences, which is a leveraged product. It's why it's in the United States, why it's illegal. My point with saying that is that if you had leveraged this move and just said, well, it goes up every day, I'm just going to buy it. Well, then what happened? Well, if you were down 10% without leverage, with leverage, you could have been down 20, 25, 30%. And yes, it did bounce back. But what if it had turned into a bigger pullback like 2022? What if you had gotten antsy and said, I can't wait anymore. I have to buy this sucker right now. And then it went down 25, or even at one point, I think it was like a 30%, almost let's say 20, let's just say 30. If you had levered that thing up, a 60% drawdown, many people would probably realize that loss for fear of it getting worse, right? And had you have done that, it recovered, but look at the recovery time. So my point is, what I'm trying to say, long story short, is I know that it can be tempting when you see gold, Bitcoin, indices, when everything is sort of in an everything rally. You have to be really careful. The temptation is real. I feel it right now as I'm speaking, to just get involved, get long, chase it, because it's going higher. It's going higher. My goodness, it's just going up every day, right? But look at this, 745 days. That's how long you would have had waited just to get back to break even, and you would have had to deal with a painful, agonizing period. I mean, this was a rough sell-off, and this is the diversified S&P 500. Most of the time, people trade things like NASDAQ. They go long tech because it's the high growth, but also high risk. This one took you 760 days to get back to break even, and the drawdown here, guys, was 38%. So if you had went full port long, chasing into the breakout to the new highs, you would have had a 38% drawdown. You put that on leverage, people would blow accounts, right? So you have to be careful. You have to be careful when something is at all-time highs. It absolutely does not mean that it cannot make new all-time highs. But this is where, especially the playbook for me, when we're trading at all-time highs, number one, I use a stop, right? I have to use a stop, because I believe that a lot of times when you're at all-time highs, you're likely to continue to make all-time highs. Right now, there are great conditions out there for more all-time highs coming in the stock market, in my personal opinion. However, that's what that guy said. That's what that one guy who bought the top over here, that one guy who bought the top, over here, that's what they felt and saw too in the market until it changed. Now, you would have been right many more times than you were wrong had you, bought a breakout of the highs. But what are you going to do when you're wrong? That's the big question that every trader has to ask themselves. Whether you're trading gold, NASDAQ, currency pairs, doesn't matter. Whatever you're trading, you have to ask yourself, what's my game plan? What's my angle if I'm wrong? So if I'm looking at the NASDAQ specifically, which looks very, very strong, the least I can do is wait for a pullback to this 21,100 level. That's the least I can do. And even then, that's an aggressive long entry. You're still very close to all-time highs, and that's not a guarantee that that could work, right? So if I go long there and I put a stop, somewhere around here, what am I putting into the market? Well, I'm putting in this risk here that, okay, the market could tank back down. And then I probably maybe would take another shot here, right? So if I went long there and then the market, stops me out there, then I would probably try once more around there. So I do have a game plan, but what I'm not willing to do is go heavy risk, heavy leverage right here long. I am getting some interesting signals from the Edge Finder right now. We've got bullishness on oil, Bitcoin, copper, SPX, Russell. This is why I said I've got a lot of stuff to do here this morning, is because there's a lot of actual pending setups for me. I like Bitcoin. If we can get a pullback into this maybe 92,000 level. So that's on high alert for me. I've basically rejoined my trade, but with a much smaller size this time around. I had a good sized position. I really liked the Bitcoin trade going into the election, both following Biden's election and Trump's previous election victory. When they won, both times Bitcoin actually had a nice run to the upside. So this third time I was like, okay, I think it's going to likely do the same thing. And sure enough, it did the same thing, but it went parabolic because you had Donald Trump win, who has been an advocate for Bitcoin with JD Vance, but also him and Elon Musk are like best friends now. And Elon Musk is the crypto guy as well. So there was like this crypto surge that I think is, likely to continue. I mean, I think that is a pretty good story to go to the end of the year. That being said, I'm not willing to chase. And if I do take a trade, there's going to be a stop on it, right? So I've got to manage my risk. But I like the idea of potentially getting back into my Bitcoin trade with a smaller, more controlled size this time, and a stop loss. So if I take that trade, I will share that in our Discord channel in the VIP room. But let's also talk about oil, which oil's making a bit of a comeback. And I mentioned this a second ago, but oil actually has a bullish rating on the Edge Finder as well now. So what that's telling me is, okay, can we show me, right? So I like the bullish idea. The economy in the US is looking upbeat. The demand for oil is likely to be pretty solid. Yes, you're going to get, Donald Trump, drill, baby, drill, all that concept, right? They're going to pump a bunch of oil. But if you get a pickup in the global economy, if that happens and China comes back into the picture, I mean, I don't know, because the whole trade war concerns, etc. I see there's a bear case for oil. But I'd like to see something, some catalyst, something that drives oil prices higher. Because if that happens, if you get a nice catalyst, for example, stimulus from China, or, US economy adds jobs this week, or something that looks real, bullish for global economy stuff. If you get good PMIs out of Europe next time around, something, right? Some catalyst. If that happens, then I love this idea of potentially looking for a breakout trade on oil. So I'm getting a bullish reading on the Edge Finder, but this is a good example of a time where Edge Finder is bullish, but my technicals, I don't see it yet, right? So I don't love this chart. When I look at the daily chart, this is a little too choppy for me on oil. But what I might do is essentially keep this on the watch list. You get a breakout to the upside, all right, then we're talking. Then I'm probably going to look for longs.
But let's take a look at gold. Now, weekly, we buy it, right? Simple as that. All right, we're in this uptrend. Yeah, I'm going to say this, right? We're at the moving average 20, which we know is great dynamic support. We've had this super bullish candle, weekly candle, followed by a bottom wick on this bearish-ish candle, right? So everything would suggest we can take price back up to here on the weekly, right? Yeah, Okay, so let's now drop down to the daily. And basically, we're in an uptrend, right? Again, just follow structure. Yeah, we're in an uptrend, and then prices just got stuck. Yeah, I'd say that level's broken, and we're getting higher lows, right? We're in an uptrend. But this price action, without swearing, is a load of crap. Yeah, you don't want to be in that. So all I want to see is a break of this consolidation. So if I get a nice big bullish candle that breaks through this level, I will be buying gold, right? I'll be buying gold back up to this level, if not higher. Okay. Now, the opposite of that is true, right? If we start getting, a breakdown of this, and we get a breakdown, then I would suggest we still have room to the downside. But the weekly chart, right, is telling us to buy. So between here and here, if I get a big bullish candle, break out of this level, I will be all over gold. All right, and I will be buying it. Let's have a look on the H4, see what price action is doing here. And look at that. You can feel the confusion, right? That is 1, 2, 3, 4, 5, 6, 7, 8, 9, lots of hours of confusion, right? So the market's confused. Buyers and sellers are confused. Basically, in this area here, right, there's a bit of confusion. So just, don't trade these areas, right? If you trade an area of consolidation, you're going to get chopped to death, like literally. So wait for a break. Wait for a break so that buyers are in control, right? And then take the trade, yeah, and then take it back up to here. Right. What else are we looking at? Okay, so Freak FX says, while you're waiting for something to break through, the money passes through you. I hear what you're saying, Freak FX, but I would rather be in at the right price than the early price, right? So what I mean by that is, right, you let's say you like gold, right? And you could start buying here, right? You put your stop below here, right? And, price comes down, takes you out, right? You'll be like, okay, maybe I did get in a bit early. Okay, let me rephrase this. There's not enough confluence for me to take a buy here, right? If you want to buy, I've got this level that can stop me, this level that can stop me. Okay, so I have to wait for that break for it to tell me that there's nothing stopping my trade, right? So, if you start buying here, you're going to potentially have some problems here and some problems here. Price could reverse and come back down to the bottom of the range that we're in, right? Whereas when price breaks, or if price breaks this level, right, there's not much stopping it here. There isn't any trouble for it to run into, right? And I would make that sacrifice in terms of, do I get in here and potentially come up against some problems, or do I wait for this break? And that gives me more confluence and reasons to take the trade. And I would 10 times out of 10 rather be in this buy than this buy. 100%, right? Doesn't matter if it means I have a larger stop loss or my risk to reward is reduced. I don't care. That here is the right price. Okay, because it's broken everything. Sellers have given up. Then I will enter the trade. All right. So yeah, the right price, not the early price, right? Even if you want to, you can be more aggressive. Like, if you want to be more aggressive with your trade, just reduce the time frame you're on, right? If we waited for a H4 break, you could be waiting for a long time. But you could, potentially look at a H1 break, right? And you're going to get in at an earlier price. But I still need to see trend moving with me and coinciding with daily trend, right? You're just increasing the probability of the trade, like fact. So yeah, I understand what you're saying, but for me, it's about the right price, not the early price. Most retail traders are afraid of having large stop losses. Yes, that is a bit of a problem. People have tight stop losses and market whips them out and they carry on. And the thing with having a large stop loss, guys, I'm totally okay with that. And I will build the trade, right? So let's say we had a break here, right? Let's say we got here, we broke this level and I started buying, right? Now, my stop's below here, right? And that's a pretty big stop, right? My target's up here. Now, I'm roughly getting 1:1. But what you don't have to do is hit this trade with 100% of size, right? You can hit this trade with 50%. And then if you do get a retrace back into here, you can hit it with another 50%. And then all the while you're building the trade, your risk to reward is getting better. So I'm a big believer in building trades, managing trades. I think there's so much you can maximize profit and also reduce risk along the way, right? If price starts doing this, right, we get a big breakout, we start buying, right? And then price comes back down, we can buy again, right? And then if price shoots off from this level, breaks this high, I can then move my stop loss from down here to up here. And then what I've reduced this trade in risk, I can then add to this position right here and do it again. Buy here, price comes against me a little bit, I can buy here and just keep building the trade all the way back up to here.
We've got PMI numbers just dropped. I'm just hopping in just to
they did.
Back to them for a moment. Came in a little bit light, 52.1 compared to the 55.7. I remember in a previous live stream we were together and they were very, very strong when they came out last time at 56 or so. With a 52.1 number, that is a little bit lighter than expected. So we're seeing stocks give back just a little bit of their gains here recently. Nas down slightly, S&P down a little bit. Gold actually going to probably like that figure. Simply because it could lead to a weaker dollar. We see dollar index coming down. And that's, when we take a look at services PMIs just for a second, I mean, this is one of the big economic reads that really got a lot of people very bullish about the U.S. economy. We've talked about this in the past, James, but of course, UK, US, a lot of these, giant nations, a lot of their economy is built around services rather than like manufacturing, like the likes of like China and things like that. But with the US, again, services is a very key component of the economy. So outlook looking a little lighter in terms of what purchasing managers, of course, this is the purchasing managers index, what they're forecasting for the future of the services part of the economy is a little bit less than what may have been forecasted by analysts at 55.7. This index, guys, for listeners who are newer to fundamentals and specifically the PMI number, a reading above 50 means that, basically purchasing managers who are surveyed in this feel that there is growth coming for their respective economy, and then we index it and look at the whole. And then, below 50 would be considered contraction. A lot of places in Europe are actually seeing contraction in their PMI numbers. Same thing with the UK. But then for the US, there is still expected growth. But specifically today, the way to read this would be we expected for forecasts to be very positive from purchasing managers. And in actuality, we do still see a positive outlook, but not nearly as red hot as the 55.7, coming in at a 52.1. We'll take an updated look just really quick. So stocks just modestly lower on that news. Not a huge game changer there, but dollar index is lower. And then gold and, of course, silver also shooting up here a little bit this morning in response to that. Gold trading at 26.50. You've got, again, stocks just slightly off their highs.
Got the Edge Finder reading bullish right here. If you give me a second, let me find it. Right here. So this was a good little confirmation, really. So again, you can see a seasonality here, plus 1.8%, which is a very strong seasonality to have. We've got COT short, but to be honest, don't really care about COT. Outperformed them anyway. They are losers. Obviously, I'm joking. But proof of execution is here. If anyone is doubting that, obviously this is MetaTrader 5. So that's about it in terms of the S&P. I'm short EuroCAD. This one has been probably the most annoying trade I've had all year. It's just been non-stop drawdown since I entered. So since we had the Trump tariffs on Canada, this trade went straight into negative, and since then it's just hovering around drawdown. I'm really happy to continue holding it because I'm pretty confident that the economics behind this remain bearish, but it's just one of those trades that isn't doing anything. It's just been sideways ranging in drawdown, so it's just not my ideal trade. Also short on the pound Canadian, and I'm currently DCAing short on euro yen. So if we have a look here, this is again very simple, the way I always trade, looking for this 50% pullback or this fib pullback that we've had. This is also a break and retest of previous support. So again, bread and butter, very simple, always very straightforwards. Then we've also got some DCA positions here on euro dollar, which I can show you here. So it's, yeah, again, sort of just sideways ranging. So I'm waiting for a breakout down to the previous low at sort of 1.043. Hi James, when December do you tend to stop trading? 20th to 23rd? No, I stopped trading much sooner than that. So once I've closed all these open positions, I'll be done. Normally it's the first 2 weeks of December that I'll give myself to finish off the year, then I'm done. So it'll be around the 14th of December. I'll start calling it a year, just because we've got to obviously account for the people actually moving the markets, taking holidays, and starting to close positions, profit taking and all that sort of stuff. It can get very briefly choppy, and then it can get very, very slow and very boring, which obviously I don't want to sit in over Christmas. I like to have an empty portfolio over that period so I can just sit back, relax, and go into a new year with a fresh start. Had to go against Edgefinder last night when I entered USD JPY for a buy. Let's see how dollar yen's doing. I don't think it would be very good. Well, I guess it is doing okay. So suppose we broke previous high, but in my opinion, it's still heading to the downside. This actually right where it is wouldn't be a bad idea to go short. If I didn't have a maxed out portfolio, I would actually consider going short here. We've just had this moving average cross. We're still overall in this downtrend. Got the RSI that's a little bit oversold, and obviously the yen has got some potential to keep strengthening as we're heading into Bank of Japan rate hikes. So yeah, dollar yen seems like quite a nice sell, really. Even though the dollar isn't really the weakest currency, it's just one reason why I'm not too bothered about missing this trade, because I do quite like the dollar to the long side. So I'm not really wanting to sell the dollar, really. Actually, something, this is a good example. So look what's happened here with the Australian dollar against the Canadian dollar, and look what the Edgefinder says. So we can see here, -7, bearish, the most bearish reading on the Edgefinder. Guess who went long? It was Morgan Stanley. So maybe Nick needs to get on the phone with Morgan Stanley and start trying to pitch them. Maybe they'll be a bit more profitable next year with the Edgefinder. I entered because of the turmoil going on in South Korea, which had a negative impact on the yen. Fair enough. That's a good point. Although the South Korean thing, what was it called? The martial law's been lifted. I'm fairly sure it was a very pointless move, to be honest. They put it in and then they pulled it back almost instantly. Fundamentals are good for dollar, so UJ may go up. Yeah, I had this conversation yesterday on stream. So the way I see dollar yen at the moment, although the dollar is very strong, if we look at the dollar yen on the daily or the weekly, look at how much it's risen. Well, when I say recently, you know what I mean? It's since 2021, which, you know, in terms of trading is quite recent. This was all driven not necessarily by dollar strength, but primarily by yen weakness. So now we've got yen strength coming in. It would be natural to see this, you know, this upwards momentum start to slow down as we see repositioning to account for the Bank of Japan rate hikes. So I'm not really looking too much into the dollar strength for dollar yen, as strange as that might sound. It's more looking towards a repricing of this market. I mean, you know, as always, I can't see the future. I may be eating my words in a couple of weeks' time, but that's just the way I see it for now. It was lifted, but now they're calling for the impeachment of the president. Are they? That's crazy. I need to keep up with what's going on in South Korea, actually. There's potential I'm moving there next year, so it should be a good idea to probably understand what's going on. Is ADP NFP results bearish for the dollar? I don't know, to be honest. Let me see. I don't really pay attention to ADP. It's kind of a null point. Has the results even come out yet? Where is it? ADP here, 146. Yeah, it's not the best numbers. It's lower than forecast, lower than previous. So it could be a signal that NFP is going to be a little bit worse as well. But yeah, ADP is kind of like, who cares? Who uses it? Yeah, I don't really think it's had much of an effect on the dollar. Still moving to the upside overall. So what have we got here? Euro yen. Yeah, there's not much really going on with my positions. I'm waiting for a pullback on the S&P so I can scale in. The unfortunate thing is this trade, this position here, it was really low risk. So the profit that I'm in at the moment, it's basically nothing. It's not really even worth holding. It's just taking up margin. So I'd love to see a pullback so I can scale into a full position. But whether we'll get that, I don't know. So what do we have tonight? We've got, it's the Powell speech. Interesting. Okay, well, we'll have to see how that goes. I think I'm on actually later today, so we can go into the Powell speech later. I'll leave that for my other segment. So let's have a look at what's going on with the Edge Finder, see if we can find some setups. We've got the Dow bullish. I actually sold the Dow yesterday, made some decent money on that one, on the correction. I think, again, I actually covered this one on stream, but I took profits quite quickly. The problem is with the Dow, although it's got the most bullish reading, I'm just not super happy with the price action at the moment. We've still got this market gap, and I'm actually not sure if this market gap is broker dependent, but it's still a little bit of a concern for me. So I'd really be looking for a slightly lower move down to this previous level. Stop loss, I suppose you can either be super aggressive and have it just below something like this, or if you want to be a bit more cautious, down at this previous low, this would be at 43,714, and then a take profit probably just at 1 to 3, something like that.
To me, I still like long Aussie CAD. I could be waiting a little bit longer than I want, but I'm liking this kind of little fake out here. If we end up closing back above, let's say 9,100, then we could be putting in a bit of a move here. We start breaking higher. But anyway, I like Aussie CAD long. So I'm going to hold Aussie CAD long. Aussie Swiss, I'm still scalping this thing, scalping it with a robot, buying only, and still willing to hold on to this one for some positive swap for right now. Watching support level. If we do revisit the flash crash low, I'm going to buy more at the flash crash low. I'm going to take this all the way back up into this big inefficiency, all the way up towards 6,000, and ideally all the way up towards the highs here around 60.50 to 6,100. So to me, this is, I don't know, this is just a good spot to be watching. But if it holds support, there's either some type of like choppy, like broadening pattern where it's all messy, but we have some support and resistance structure we can work with. Or we just, watch the lows and watch the lows and watch the lows and scoop up some bargain shopping, enjoy some positive swap while we get it, and then see if this becomes a bigger move to the upside. Next week, if I'm not mistaken, we also have 3 rate decisions, ECB, as well as the ECB, the Swiss National Bank, and the CAD, right? We have BOC, ECB, SNB all next week for rate decisions. Then we have the Fed and the BOJ. So you're throwing in the next 2 weeks of trading, we have 5 rate decisions from these central banks. We also have inflation data coming. So, yeah, I mean, there's enough to pay attention the next couple weeks of trading, that's for sure. Okay, all right, Aussie Swiss, I'm still going to hold long and scalp. Scalp to the cows come home. Aussie yen, no trade. Aussie New Zealand. I like this currency a lot, just no trade at this time. I'm looking to see if the Aussie New Zealand will come back down to like 106 area, and I'll start looking to buy some support. Aussie dollar, I'm starting to get looking to get filled at my lower levels here. So I want to be buying this thing 63.10, 62.10, 6,000. Which is, 62 is right here. 6,000 is obviously lower. So I'm just looking at buying low. So 63, 62, and 6,000. Test these levels. And if I can kind of catch a low here, even if I take this one back to break even, and this is a winner, and this is a winner, that's at least a starting point on this Aussie dollar. So I'm looking to buy, at lower prices if we come in and settle into multi-year support. This goes back to 2022, 2023. Got some pretty good structure here. The last time we were that low in the Aussie dollar was the COVID crash during, February, March of 2020. CAD also scalping and buying and willing to hold, trying to get this one back up to. There's a really nice pocket up here around 6,500. So that's at least my first target. My higher level here is around 70. This one way back here towards like 71.50. That's obviously a little bit further away. That's going to take longer to hold, but I'll be watching for some type of price pattern to emerge. And I've said this one for a while. I mean, if we have this high and this is all just like some big head and shoulders that sets up, then that to me is worth lots and lots of effort to hold longer, for a big swing to the upside and make a ton of money. But it's not there yet. CAD yen, Swiss yen. Swiss yen's pulled back a little bit. I'll keep an eye on that one. Euro Aussie, I didn't really love this currency pair, so we're seeing a weaker Aussie. I just see this in a range trade, so we're off of support. We have some intermediate resistance in here. So right now it looks like we're getting, just a run from support to resistance. If anybody's long Euro Aussie, 6,600 is a pretty notable spot just to be protecting some profit. Euro CAD, I'm not doing anything on this one right now. Seems pretty volatile. Euro Swiss, I'm still buying and holding, trying to scalp for those little bottoms. Euro Pound, I'm still long. Okay, it's super low volatility, but I'm looking to see, does this thing settle in and actually snap up? We'll find out. Pound, Euro New Zealand, Euro Yen, I'm not doing anything. If Euro New Zealand, same type of thing. A lot of structure down here around 7,500, resistance around 8,400. So if you're buying low, selling high, if you're looking at current structure right now, it's kind of right in the middle. That's a hard one to predict where price is going to go, so I'm not trading it right now. And then Euro Dollar. If anybody's interested in hanging on to that 105 handle, that's okay. Just be careful. If this dollar's not ready to form a top and the Euro dollar's not ready to form a bottom, we might have a whole new story developing if we come back to parity. So if this is, high to low, lower high to lower low, lower high to lower low, I mean, we could get back to parity, but I would be scooping up some buy levels, from 100 down to 96. I'm probably going to dollar cost average into the Euro dollar and then take this thing back into this sticky level at 105. That could be a really nice trade. This might be a 2025 trade, but if it sets up and I can kind of pile in for like 1,000 pip run, there's a lot of money to be made on a trade like that. I'm just going to be really, really patient. Okay, Pound Aussie, still kind of range bound. Watch this one. It's kind of running hot right now, right? That's a big daily candle here on Pound Aussie. I wouldn't just automatically assume that it's going to drop, but watching to see if price behaves. I mean, there's been some pretty good rejections here since 2023. That if we're not going higher, look to see if this shows any type of rejection. So there could be some controlled risk in that environment if we hit resistance. Pound CAD, no trade in this one yet. Pound Swiss, I'm still holding long. There's a lot of chop on this one, but I'm still holding this one towards 120. Pound Yen, no trade. Pound New Zealand. Again, Pound New Zealand, Pound Aussie running. Here's another range. Watching this high right around this 2.19, 2.20 level and this low. Okay, so if we're coming up to resistance, look for some smaller time frame rejections and see if the Pound New Zealand will sell off a little bit. Okay, Pound Dollar. hanging out right on the backside of this trend line. Let's see if it actually is going to hold in the near term. Even if we pull back into this area, that might be good enough to take some small profit. So I'll keep an eye on that one. New Zealand CAD also little nasty mover, but I still like this kind of channel. I've talked about this. There's support, there's resistance, there's a bit of a channel. So I'm looking to just kind of stay long, buying those bigger lows and those bigger moves until we get to like 8,800. New Zealand Swiss, positive swap, very patient. We got the flash crash low from August, and we'll see what Swiss National Bank says next week, if it moves the market at all. New Zealand yen, not much there. Stay out of that. New Zealand dollar starting to get filled at these lows. So I've got some dollar cost averaging levels on New Zealand dollar that I'm liking. So I'm in and I'm holding. Dollar CAD, we're at 40.64. I'm still looking to take this up towards 45 to 4,600. I'm going to hold on to this long. Dollar Swiss, still holding long. Dollar yen, at this time, no trade. I don't know. Don't fall in love with the yen crosses. I mean, this high, this low, it wouldn't surprise me if we see a lot of this and the market has to go somewhere else later. Okay. The one potential surprise we might see in the Japanese yen would be the piggyback of if we see the Bank of Japan right after the Fed on the 18th. It's very possible we have a pretty disruptive end of the year on the Japanese yen.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.